The weekly vertical crossovers continue to make big virtual dollars for us in the S&P 500 and the NASDAQ 100, up again today, fifth week of up movement since the weekly vertical crossover on both these charts back on the 25th of January. We're going to go over those in detail. Also tell you about the drops, big drops in 20-year bonds and gold. Are we going to have crossovers going down in the near future? Hey folks, that's fine because we can do inverse plays. We'll talk a little bit more about that too. Hey, special information for all of our Patreon supporters. And if you want to be one and get in on this, follow the link in the show notes to becoming a Patreon supporter. We'll be reviewing the charts for several of the stocks and ETFs our Patreon supporters want us to do. We're going to be doing that over the weekend, so go ahead and become a Patreon supporter. Maybe your chart will get in there. If you're interested in having us look at particular stocks, ETFs for you, we'll do that. Plus, we have a live Q&A call-in this Wednesday, March 6th, at 12:30 p.m. Eastern Standard Time. We need questions from Patreon supporters. And again, to get all that information to us, just write us cw@chartingwealth.com. And also, we sent out a special surprise. Check your email if you're a Patreon supporter. We sent you an exclusive training entitled Finding the Best Entry Point for a Trade. We're excited about that. We want you to have that, review it. If you become a Patreon supporter, we'll send that out to you too, plus all the other great stuff. That includes the long-term training on the quarterly chart. That includes the Bitcoin training and the Bitcoin chart. That includes the short chart training, all the other great stuff we have for you. And again, if you want to participate, you need to become a member at any of our levels. Patreon supporters of the heart and soul of Charting Wealth. They're the ones that help pay the freight so we can bring this to you every day, and we appreciate you. Let's jump into these charts. Again, it's just beautiful when you see this weekly vertical crossover work so marvelously. Derivative oscillator still heading up. Price percent oscillator heading up strong. We like to see that. And consequently, isn't it interesting that bonds and gold are rolling over strong as these charts continue to move up? Remember, bonds and gold to a smaller extent tend to be the safe havens when the stock market's not doing well. Well, the stock market is doing well. How much more movement does the stock market have? Well, we can see where the stock market tricked out, topped out before. That was somewhere, let's see, on the S&P 500 back in September, around September the 21st, the week ending then. We saw the S&P 500 top at 293.94. That was on SPY. So we ended the high for the week at 281.31, so there's still quite a bit of room for that to happen. We did see that we had a possible leveling off somewhere at the 275.60, but then again, things just continued to move up. That didn't seem to be a floor, a level where things might stop, so things just kept proceeding up, which is sweet to see. The magic of the weekly vertical crossover continues. We go from the weekly to the 2-day. What do we see there? Well, price movement is above just barely that 2-day trend line. Don't forget that prior 2-day candle was a red spinning top. Sometimes what the market does, and we've seen this happen during this time period a couple of times, where after bump ups, the market sort of digests gains and then keeps going. And we've had questions from you guys about, well, we'll talk about the 4-hour chart here in just a second. Things are pretty flat, though, as you can see on that 2-day chart. So continue to pay close attention to it. Derivative oscillator losing energy. That price percent oscillator is pretty flat. Red signal line heading up toward it. How much longer do we have these up moves? We don't know. But we'll take the profits in our virtual trades as long as we can. Now we look at that 4-hour chart and we see where things topped at 278.50, and that was back on Monday the 25th. A sideways slide sort of down up toward the end of the week, but again, not reaching as high as it did on Monday. We see that the derivative oscillator is negative, price percent oscillator is negative, heading up. Again, it's above the 2-day trend line, but pay close attention if we start having crossovers going down with as flat as the 2-day chart is. Pay close attention to that. Now, some of you have asked, hey, once I get in using the 4-hour chart, If it's not the typical jumping in point right after a weekly vertical crossover, remember, that method is we get in at 10 a.m. if the 30-minute chart is not really drilling down, which it was originally when we had this latest crossover. It corrected and then crossed over on that 4-hour chart going up. Special training we did for our Patreon members, we cover some other methods for jumping in a little earlier. But our typical method, if the 30-minute chart right at 10:30 doesn't work, then you look back over for a crossing over going up on the 4-hour chart, which gave us a good crossing over. But once you get in, folks then ask, well, if the 4-hour chart crosses over going down, does that mean I get out? No. Once you get into a trade, you get away from the 4-hour chart. You still, all the charts all the time, but you go back and you start looking at the 2-day and the weekly chart. Those are the ones who help you really extend your movement so that you can go for long-term trades. Remember, the bigger the chart, the bigger the virtual dollars. And again, we don't say real dollars. Why? Because we're not a stock calling service. You don't pay us for that. We only charge for our book, and we only take Patreon member support. We are not a stock calling service. We're an education firm. We want you to train with us. Once you get good, put to work all your knowledge, and you spend your own money however you want. You can spend it on Disney World, or you can spend it in the stock market. That's up to you. We want you to train with us, figure out what's going on, get good at reading these charts before you ever even think of spending a single penny. Otherwise, you're going to lose everything. I can just about guarantee you. Okay, let's go from the S&P 500 now with what we've learned to the Qs, that is the NASDAQ 100. What do we see going on there? Well, NASDAQ 100, of course, also, make sure we get that weekly chart, had a weekly vertical crossover back on the week ending the 25th of January, and we've just finished our 5th week of up movement. Stock movement's well above the weekly, above the 2-day, and derivative oscillators gaining momentum. Price percent oscillators heading up quite nicely. Weekly chart is strong. 2-day chart, little weaker, well, weaker. Not as weak as the S&P, but weaker. But again, after we had a pullback on the 2-day chart ending on Thursday, the 28th of February, the first day of this latest 2-day chart is up. Again, it is topping out above where the prior green candle was. Not really super strong yet. Derivative oscillators continuing to lose upward momentum, but that price percent oscillator is heading up. Remember, it's our main indicator. Great trainings at the website on the price percent oscillator. You need to really understand that oscillator. That's our main indicator, very important. 4-hour chart, up in the morning, up in the afternoon. Nice long wicks on top, but some wicks on the bottom too. Derivative oscillator still negative. Price percent oscillator negative, but heading up. So again, prices above the 2-day trend line, but keep an eye on things on Monday. Remember, things topped out last back on the 4-hour chart on Monday at, let's see, that was actually in the morning. So be careful. Be careful as this sideways slide is underway. Market can be digesting and start hammering up again, but just pay close attention to what's going on. Don't want to lose what we've gained, but again, you don't have to capture every single dollar if you're going to hang in there and try to continue riding that big wave as long as you can. Don't get greedy, but don't be stupid and afraid and get out too early. Again, you're practicing. That's why you're filling out that trade worksheet. You can find it in the show notes. If you're not a subscriber at chartingwealth.com, you need to be. We send you the emails every day with all that great information. And also, if you've not ordered our book and you want to support us, go ahead and order the book too. You can find links to that in the show notes. Those books are available for you. We appreciate your support. Move on. Last 2 charts, TLT 20-year bonds, down pretty big for the day, 1.13%. Big red down candle for the week. Little bit of a wick on top, big wick on the bottom. Price percent oscillator has popped over going down. Hasn't crossed yet. But as we end the week, the derivative oscillator is, well, still just barely green. Hasn't flipped over yet, but looks like it's close. So still a confirmed up move on the weekly, but we'll see how that continues. Now, of course, the 2-day chart crossed over going down all the way back on the 15th of January. Then it went sideways and tending up, and then is sort of circled back around going down. So again, we just have continued down move over the last few days on this 2-day chart. So we'll continue to watch and see what we see. Don't have a trade because the weekly's up, the 2 days down. Derivative oscillator gaining downward momentum, price percent oscillator doing the same. And we look at the 4-hour chart, and of course, we see 3 days of strong down movement. Wait and see how things shake out in TLT until we have a weekly vertical crossover. We're not going to have a trade if that ends up being one down. If it is, then of course we can do some inverse ETF or shorting 20-year bonds. We'll talk about that a little more when and if that occurs in the short term. So we go from 20-year bonds to gold. Now, gold is interesting. I know you guys love this weekly chart as much as I do in gold. It has just been great going back for an entire year now. It has just been prescient. And is it getting ready to show us a big crossover going down in gold? Don't know yet. We do see there's some strong down movement over the course of the last week, but 1 week doesn't make a trend. Derivative oscillators lost a lot of momentum. Price percent oscillators heading down. The weekly chart still in a confirmed up move. The 2-day is not. It crossed over earlier in the week going down in this latest red candle, first day of the latest candle. Strong down candle. Derivative oscillator gaining lots of momentum. Price percent oscillator heading down, and that 4-hour chart, you can really see where things in gold have hammered down. So we'll wait to see how things shake out between the weekly and the 2-day. Folks, that's where we are as we end the day on Friday, as we end the week and go into this first full week in the month of March. Again, appreciate our Patreon supporters. Don't forget the live Q&A on Wednesday, March the 6th at 12:30. We've already sent out to the current Patreon members the call-in numbers and codes. If you join, we'll make sure to get those out to you in the meantime. And also we'll be reviewing those stocks that our Patreon folks like. We'll pick a few of those to look at and send out that special training. And of course, Patreon members, do look in your emails for finding the best entry point for a trade. Special training we have for you. Haven't purchased our book? Do so. First way to understand in depth what we do here. 8th printing. And again, just sent out a bundle this morning. You want one? We'll get one to you. See the link in the show notes. And if you live overseas and want the book, this is what we ask you to do. $40 US is what it will cost. I know the shipping's going to cost us more than it typically does. We'll just suck up the difference in that. But go ahead and go to the same link in the show notes to purchase the book. Instead of purchasing the book, just make a $40 contribution. Make sure to email us and let us have your entire foreign address. And you can email us cw@chartingwealth.com. Once you make that $40 donation, we will send you the book wherever you live in the world, as long as it's not somewhere out in the wilds of Kazakhstan where there is no postal service. Otherwise, we'll get it to you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.